Because, number one, I have been groomed for this moment in time. And really, my lessons began when I was a child because my uncle was a major antique dealer back east. And so he taught me the patterns of how hard assets actually flow from undervaluation to fair valuation to undervaluation constantly like that. And when I was about 10 years old, and I didn't even realize how influential this was, but when I was 10 years old, my parents and I were at his house. And he said, "Come here, I want to show you something." And he took us in a back bedroom where he had two tall floor safes. And he opened the doors of those safes and he said, "If anything should happen to me, your Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes." So naturally, I turned around and looked, and what he had in there were all $20 pre 1933, $20 gold coins. So I didn't really understand the significance of it at 10 years old, but knowing what I know now, I would guess he had a minimum of 3,000 ounces. This would have been in 1964 when it was illegal in the US to hold more than 5 ounces of gold any other way than the way that he was holding it. So it was the kind of gold that not only could he hold, but he could actually use it. Well, no, everything starts slowly, right? And they start the lie and then they get you to believe the lie. So you have to also keep in mind that from 1913, when the Federal Reserve was first legalized, that they had 1 ounce. Well, here it is, a 1 ounce gold coin. That's the camera right there, one. There you go, 1 ounce gold coin, as well as a $20 gold certificate. And then magically also Federal Reserve notes, which were actually corporate debt converted into the new money. And they were all allowed to operate in the system at the same time, at the same stated level of purchasing power. So the public got used to it for 20 years, right? 1913 to 1933. You adapt the population to it slowly, yeah. Over generations, people start forgetting. Exactly. So when they took the gold out of the system, which really they were taking the public's power away, of course, it's a hidden tax. It's asset confiscation. Absolutely. But it was also setting up to go on to the pure debt-based system. Because if they were used to using all three things as $20 when they took the gold and the gold certificates away, they still had those $20 Federal Reserve notes. So the population thought nothing had changed, when in reality, everything changed. Everything did. And what did that actually do? Because that's what the public needs to understand, which is the public had power. If you didn't like what the central bank or the government was doing, you'd go in with the bill and come out with the gold. And what gold really does in the monetary system is it creates or forces fiscal responsibility. Of course, it puts restraints on government. Exactly. Now, because we have limited time, would love for somebody like you to explain exactly why is gold money? Because that's something important. I think people do not understand today what money is. So unit of account, medium of exchange, and storage of value. What does that mean? And why has gold over thousands of years retained these three fundamental features? There's actually one more, and that's a long-term store of value. So the first one is about getting fairly paid for your labor today. And then that long-term store of value is whenever you go to use that money, it has the same purchasing power as it did for the labor that originally created it. And it's really quite simple because what we're talking about is sound money, which is above all governments and central banks to their ability to inflate away. And it's real simple. Gold and silver both are used in every single sector of the global economy. So they have the broadest base of functionality and the broadest base of demand. Where is fiat or government debt-based currency used? One place. Where is cryptocurrency used? One place. So if you're going into a knife fight like you did in Venezuela, do you want something that has one level of demand, or do you want something that has a massive level of demand? This is your financial bazooka. No, and that's because, and really it is gold. Gold is the primary currency metal, and that's because it's indestructible. And I want you to think, I want everybody to think about this actually, because it takes labor and energy to pull this out of the ground and refine it. But then that energy is stored. And because gold is indestructible in any form at all, it can be melted down and used again in every single sector of the global economy. And so this has infinite value because this energy is stored for use over and over and over and over again. Yes, no, 100%. I think this is a very powerful sentiment, and I think throughout history, many tycoons have acknowledged this. Isn't there a famous quote? I'm pretty sure you know this better than I do from JP Morgan. Didn't he say something like, gold is money? Oh, dollar is debt or currency is debt, something like that. All other, yes, that is pretty close to what he said, that only gold is money, everything else is credit. Ah, there you go, right? Everything else is credit. And the Bank for International Settlements, which of course is the central bank or central bank, has said only gold has zero, is the only financial asset that has zero counterparty risk. Interesting, right? Well, if it's credit, then that means it's a contract. Wow, I have lots of thoughts on that. But number one, I started watching Bitcoin when it was about $7 a coin. So I've been watching this evolution. I do not think that it's an accident that Bitcoin came out to the public in January of 2009 and quantitative easing. So all that free massive amount of money came out in March of 2009. And I've also read the 1996 NSA white paper. So that's an American government agency. National Security Agency. Exactly, on how to make a mint. And if you go in, I mean, it's open source. You can go in and read it, and you're going to find a lot of similarities. So there was frankly no doubt in my mind that in 2008, when they let Shearson go out, that the system had died. And it was put on life support to get the new system ready. And the new system was already, I mean, this isn't something that was magical. That's why Bitcoin came out in January of 2009. Because let me ask you, how much money do you think would have gone into this? Since you're absolutely right, there's the same fundamental belief. But how much more money would have gone into this? Gold would have been $30,000 an ounce or something. Yeah. Oh, well, or yeah, God knows what it would be. Levels, yeah. Exactly. Oh, and actually, that's only in terms of dollars. We should talk about fundamental value another time. So I believe that Bitcoin was a Trojan horse and is a Trojan horse to get people comfortable, get enough adoption to then go into this next surveillance economy. Well, absolutely. I'm glad you brought up stablecoins because I think this is so significant. I've studied currencies and currency life cycles since I was a stockbroker at Shearson in 1987. What people don't realize is when President Trump recently signed the Genius Act, legalizing, so that's the first legal foundation for these cryptocurrencies, he changed the global monetary system. People don't realize it, but it doesn't matter. They didn't realize it. A big bombshell, ladies and gentlemen. So please, so tell us, what changed, how everything changed? Please go for it. Well, what he really did was he gave a legal foundation to this digital currency. And where you were talking about CBDCs, and of course in the US, they're going, oh, no, no, those CBDCs. But here's where we've got the parallel, and here's where there's a repetition of history. If you go back and look in 1914, they had a foundation of gold and then that fractional reserve system on a 10-to-1 basis. And I have all this evidence for it. I'm happy to give you the links and also the images. Then it was corporations, their debt that was converted into Federal Reserve notes and then put in circulation. So today, with the legalization of the stablecoins, they're tied to dollars, but it's, again, the corporations. Like Amazon, like Walmart, like Costco, and I don't know that we have these all around the world. But all those big box retailers that are creating the stable coins, as well as the banks, etc. So take your pick. Do you want the Federal Reserve or a central bank with the CBDCs controlling everything? Or do you want Amazon and AI knowing how you think and how to nudge you? Your spending patterns, all of that. Voila. And so I questioned for a very long time and kept researching and looking for it. What was going to justify the creation of the new money? Because in the current system, it's debt. And all I ever saw was either debt, which means we have to hyperinflate away the debt that's, oh, and you've experienced that. I know what that looks like. You got to hyperinflate the debt away to start over. But now it's also going to be purchases. So you get into this ecosystem through Amazon or any other retail. And correct me if wrong, but I believe the US government, through the Treasury or the Fed, I can't remember which one, already is one of the largest, or if not the largest, Bitcoin holder in the world. Well, they're not. They're holding a lot because of the confiscation of it, and so they're going to use it as an asset. But the bottom line really is if Amazon creates this infrastructure and now you're shopping with those stable coins, then Amazon has to go and buy treasuries to back the stablecoins on a one-to-one basis. But there are no limitations or restrictions on how many entities or who, really any corporation, can issue stablecoins. Any government can issue stablecoins. So while today this is another big, huge piece, and I think you'll have an idea about this, but the latest count that I saw, the stablecoin industry on a global basis, there were about 125 billion stablecoins out there. The goal by 2028, something like that, is to have over 2 trillion stablecoins. So what would that do to inflation? Oh, of course that would be terrible. But then one thing that I do find interesting is you're talking about stable coins, and you're talking about really centralized entities using blockchain in a way or another, calling it a stable coin. But ultimately, a Bitcoin maximalist would tell you, yeah, but that doesn't apply to Bitcoin because Bitcoin is in the blockchain. It's decentralized. No government controls it. But you also said Bitcoin is a Trojan horse. How does that tie into that? You think governments have led people to believe Bitcoin is the salvation? And truly, it is the weapon that is going to annihilate the new generation of money. Well, absolutely. I don't know. Maybe I'm crazy, but do you really think that Bitcoin is outside of the system? Technology, I think, could be very promising. We're talking about two different things. I'm not talking the blockchain technology. Why do we even need politicians? Because with blockchain, couldn't we all just individually vote for what we wanted, right? They are not bringing anything up about that. So blockchain technology is over here, and it has some use cases. I'm not saying that, but I am saying with Bitcoin or the stable coins or any of these cryptocurrencies where it's been sold as being outside of the system, if you really believe that, considering the adoption of Wall Street heavily into Bitcoin and cryptocurrencies as a trading medium, because it really also goes back to how do you know what its true value is? Should it be $1 trillion? What is its value? What is its use case? What is its functionality? We don't know that yet.